types of things that generally fall into a pre-tax basis, such that you like, because we're not necessarily paying anything. We don't have any payroll at this point.
Yeah.
So, is there anything that we can provide to each other, as a benefit, without crossing that line and actually providing income?
Nothing is
Like
jumping
cell
to
phone
mind.
bills is often like something that
Well, that
companies will cover.
if it's related to business, absolutely.
Okay, so as long as you can make that argument strongly, then
Yes.
Yeah, like all your expenses that are related to your business, like,
Sure.
your laptop, your phone, all that stuff.
Yeah.
Mhm.
Meals and entertainment might be looked at every once in a while, so it's not
Laundry services.
lunch every day. So not unless you
push that line.
if you have a formal uniform policy. Then I might find it.
DC Sharpless.
I think that's not something.
Yeah.
Really, buying lunch for employees is not considered usually.
There's a few exceptions to it. The bigger companies exploit it when they have a campus because they don't want employees leaving campus.
Right.
And so that helps them be more efficient in the day, and that's what they've argued. But if I go out to lunch, if I take Derek out for lunch, I pay for it.
What if the company just does it? The company still pays for it, but you don't claim it as you just don't claim it for anything. You just don't even talk about it.
How does that
Like
roll
the things
through
that
your
happen
books?
on
How does that
Sundays.
roll
Yeah,
through your
I know.
income
Shows
statement?
that I never really do this.
Yeah. So I mean,
I'm not saying deduct it as an expense. That's
well,
what I'm
if
saying.
it's coming out of the company's checkbook, you have to deduct it as expense.
Okay, or make but you're saying you can't.
I'm
Well,
saying be careful.
Okay.
Well, but
That's
then
what happens
also
in Iowa
you
State.
have expenses that run through the business that may be deductible for business purposes for accounting reporting, but they're not deductible for tax purposes. So when you file your tax return, there's a reconciliation between what
Yeah.
is deducted for book purposes and what's deductible for tax purposes.
Right.
We'll just
And-
deduct those non-tax deductible items.
Yeah, and there are also policies like if you're working late, bringing dinner in so you can work late.
Yeah, I was
And
gonna say.
that's acknowledged.
Okay, you may have mentioned this, but, potential partner comes in town, you go out for a nice dinner.
Yeah.
That's a clear category when you do
Yeah, and that's where we have an adjustment for tax return.
Well, meaning only part of it's deductible.
Yeah, 50% is deductible.
Oh,
So
Wait, say again?
it's the one area.
50% is deductible for tax purposes, for meals and
a
entertainment.
gentle disincentive to spend a lot on that particular dinner.
Oh, interesting. So you still pay taxes for 50% of.
Yes.
I've heard if it was in the office, you can deduct it all then.
If that's because you keep people on site and, there's those arguments, yes.
Now, in determining whether this is material or not, so if we had a couple, dinners, is that small enough that it's immaterial and we don't even really have to worry about these issues?
Yes, and let me kind of differentiate from what I was saying. What I was meaning to say was if you buy yourself lunch every day, okay,
Yeah.
that's excessive and that's really a business expense. If you have a team dinner once a month, a Christmas party, that's deductible.
So when you start
50%.
Yeah. Well, no, even those team building stuff, you can deduct 100%.
Okay.
question, so like when Starbucks provide food for their employees every single day, like breakfast, lunch, dinner, like that's all.
I'm telling you the technical answer.
I got it. Okay.
Okay.
You may have mentioned this already, but what's the proper way to reimburse ourselves for things that we're spending on our own money that we're hoping to be reimbursed for at a funding milestone?
Expensify.
Just the expense fund, okay.
And submit it
Okay.
to yourself, so you have
That's-
one hat
that's
on,
the-
I'm an individual, now I'm the business owner.
Gotcha.
Yep.
Perfect.
Related to that question, my accountant is asking if I would like my contributions or my co-founder's contributions to be treated as a loan or a capital contribution, and why would I pick one versus the other, and what do you see that's typical?
Do you ever expect that loan to be repaid?
I would like that to be.
It's easier to repay it if it's a loan.
Okay.
If you just put it as a capital contribution and you make money, then you have to distribute it as a dividend, which is less tax efficient. You don't get a deduction. So it's a little, from a pure tax perspective, it's more tax effective as a loan.
Okay, and we
But you
haven't
can't
applied-
just loan everything. There's some other rules that you have to actually have enough capital contributions to get the business moving.
Okay. And we haven't applied any interest rates or anything to that. I mean, can we go and do that, like back apply that, or is it
Yes,
just?
yes, and that, yes.
Okay.
And I assume it's all started this year,
Yeah,
Yeah.
pretty much most.
so, I mean, and.
Some last year.
And it also depends if you're, on the cash basis or accrual basis. If you're on the cash basis, you haven't, you're on the accrual already?
Yeah.
Okay. So there's some
Does
other
that
rules. But
impact-
pardon?
Does that impact anything?
Well, you should be accruing for interest.
Okay.
So, and the IRS puts out reasonable interest rate
Okay.
tables.
Actually, that was the same question.
Okay.
That was,
Yeah.
that was awesome.
So, I mean, but some of it's, yeah, that's great to do, it's more effective, but, if you're looking for someone else to come in and invest it, and you haven't put any of your own money in the company, why would someone
Yeah.
come in and put their own money in? So, some of it's optics, some of it is, even if someone came in and invested later, they might just wipe out that loan and convert that to equity. So. Wow, so there's a ton of questions. I think it's great. I hope this is helpful. And I got through my first slide. So next, I just wanted to talk about employment taxes, which is why I was intrigued by what services you're using, because this is where companies can get behind quickly and kind of dig themselves into a hole. So I recommend that you have something set up where you make all the necessary withholdings and pay to the IRS or the state or San Francisco as a payroll tax also that you have to pay into. I just kind of list the various types. So there's income tax withholding, so federal and state income taxes. There's Social Security and Medicare kind of combined, known as FICA. Throwing up some of the percentages there. FICA is half paid by the employer, half paid by the withheld from the employee. That's a little unique. There's unemployment taxes, both fed and state, and the employer pays those. There's also a SDI insurance that the employee pays. So when you get a W-2 or when you've got a W-2, I mean, there's a box that'll say SDI and have some nominal amount in it. Generally, the payroll programs that I've seen take care of all of this. I haven't seen the payroll tax go through any of these payroll. And I don't know that that's, actually it's paid by the employer, so I don't think it would go through the W-2. Everyone has that under control?
As the $150,000 payroll, is that combined payroll of everybody or just any single W-2?
Combined. Yeah, so, fair point. A lot of you today may not be crossing that threshold yet, so it may not apply to you. Employment tax, these are the forms, some of the things that you'll need to be filing, again, if you have a service set up. W-2s to all your employees, 1099s to people that you've contracted with and paid more than $600 for professional services. So maybe you bring in a coder for 2 weeks or something like that. You got to get his or her information so you can send him a 1099 at the end of the year. 940 is the federal employment tax form, 941 quarterly payroll tax filing. California, there's a quarterly payroll tax filing also. You'll probably spend a lot of your time on employment taxes. If you're doing it yourself, it's a complicated area. Some other things that I referred to before. I've talked about income taxes and I've talked about employment taxes. I haven't really talked about a lot of other fees or franchise taxes. So yeah, you'll have to pay the California Secretary of State if you're doing business here. I'm sure Fenwick has you all set up, or whoever your attorneys are, with the Secretary of State. Delaware franchise tax, That's a tax. It's not really related to income taxes. Be careful if you do it on yourself. You can compute it and pay it online, and there's two ways to do it. There's a assumed par value and assumed shares. Do both methods. One method gives you some crazy answer because it's based on just number of shares authorized. I think it must be the authorized share method. It creates some huge liability. Don't use that one. And that's due March 1st. So you might want to put that on your tickler. I don't know if people will remember to do that. Sales and use tax. If any of you are selling some tangible product, something you can touch, even some software if it's on some sort of tangible medium, you will have be responsible for assessing and collecting sales tax. If you buy stuff from out of state, buy a computer from out of state, and Amazon doesn't charge you sales tax, California wants you to pay use tax, which is the flip side of the sales tax. So, and I don't know if any of you saw on your individual returns, you're supposed to self-report that. So, again, I'm telling you the technical rules.
Question, is Secretary of State fee, is that the $800 in California, or is that a different?
No, that's the California minimum tax, and that will show up on the tax return. These are things that don't show up on your regular,
Oh, okay.
1120.
Secretary of State is like an incorporation type, like when.
It's like $25 or
Oh,
65 or something like that.
Okay.
Yeah, well, there's an incorporation fee, but then there's an annual registration fee that
Yeah.
is supplemental. So, with that, I mean, I kind of covered. I don't know if I covered too much, too little. As Richard said, we're working on trying to set up some office hours here and do more earlier, while you guys, while these issues are fresh in your mind, so we can address anything now. It's always easier to get set up the right way rather than to clean things up later on. So we'll be working on some office hours to address any of your, basic income and tax questions. If you start getting real complicated on us, we'll tell you where that's going. So
When you're early stage, like many of us are here, like super early, how much does it cost to pay somebody so that you don't have to care about this stuff?
There's too much disparate stuff. I mean, employment taxes, I would highly suggest that you have a payroll provider, and whether it's it's Intuit, and if they can do that all for you, absolutely do that, because that's where I see the most risk of getting in trouble or behind.
Mm-hmm.
Sales tax, I don't know that any of you are selling any tangible property. You could get caught up there. Accounting, QuickBooks, depending on how complicated your business is, I think with that a lot of you will be able to kind of pick that up. I mean, I don't know how many of you keep your checkbooks online or something like that. I don't know that it's a stretch to then advance onto QuickBooks. For the tax returns and stuff like that, Richard and I were talking about, we're going to put together some sort of basic package for startups, and we'll roll that out for you. What we'll do is we'll do your first year tax filings. We'll put together kind of a tax calendar for you of things to remember, and answer the questions as they come up.
So I hear pretty much everyone gets a payroll provider from what I've been hearing. But do you just get one more accounting service for doing the taxes, and that's between those two things we totally cover everything?
Yeah, as long as you can do QuickBooks on your own, and if you can't, or if that becomes too much of a burden, there's some. We recommend there's some QuickBooks, like bookkeepers that might show up once a week or once a month to enter in all your checks.
Okay.
Or
That's sort of like the outsourced CFO type folks.
kind of, but on a much lower
Yeah.
level. Yep.
Okay.
So, any questions? There's Derek's and my contact information, and we'll be around the offices here over the next few weeks, over the next month.